The Fed is clueless about what is going on right now with gold and silver and what it portends. That is why you listen to the PeterSchiff show, because I understand what this means, because I was predicting this. I knew this was going to happen. I could see it coming from a mile away. The mainstream media, which had no idea that this was going to happen to the price of gold, they don't understand why it's going up because they didn't expect it. If I've been predicting this for years and now it's happening, okay, I know why it's happening because I expected it to happen. I actually expected it to happen sooner. But gold is telling you, silver is telling you, time is running out. And so you got to act, right? Because if you don't, you can't, turn back the clock, right? Once the dollar completely implodes, you can't buy any gold and silver anymore with your dollars.
The Federal Reserve and mainstream financial media appear paralyzed by a phenomenon they neither predicted nor understand: the relentless rise of gold and silver. Because their economic models fundamentally assume fiat stability, they view these soaring prices as confusing anomalies rather than the inevitable result of reckless monetary expansion. In contrast, analysts who forecasted this scenario recognize the surge as a terminal signal, a clear warning that confidence in the dollar is eroding at an accelerating pace. The metals are effectively communicating that time is running out to secure financial safety. PeterSchiff, chief global strategist at Euro-Pacific Capital, argues that this institutional blindness creates a dangerous trap for the average investor. Once the dollar enters its final implosion phase, the liquidity required to convert paper currency into tangible assets will evaporate. At that stage, you will no longer be able to buy gold and silver with dollars, leaving those who hesitated trapped in a worthless currency. Now, we present the clips from PeterSchiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The Fed is clueless about what is going on right now with gold and silver and what it portends. That is why you listen to the PeterSchiff show, because I understand what this means, because I was predicting this. I knew this was going to happen. I could see it coming from a mile away. The mainstream media, which had no idea that this was going to happen to the price of gold, they don't understand why it's going up because they didn't expect it. If I've been predicting this for years and now it's happening, okay, I know why it's happening because I expected it to happen. I actually expected it to happen sooner. But the mainstream financial media didn't expect it to happen at all because they don't know what they're talking about. They are clueless, as is the Federal Reserve, right? It's the blind leading the blind over there at the Federal Reserve. But before I get to the FOMC decision announced today and the press conference, which I don't know if this is, they keep topping each other in absurdity, but I don't know if this one contained the most, blatantly absurd comments from Powell, but maybe it did. But before I get to that, let me just kind of go back to yesterday, because yesterday was a big day. Yesterday was the biggest day for gold until today, dollar-wise. Gold was up like $135 yesterday, which I guess is nothing compared to today. But gold made a record high yesterday. But what also happened yesterday, the dollar got clobbered to a 4-year low. The Swiss franc, the dollar fell to an all-time record low. The dollar has never been lower against the Swiss franc than the level it hit yesterday. We also got consumer confidence that came out at a 12-year low. So the dollar's at a 4-year low. Consumer confidence is at a 12-year low. Gold's at an all-time high, and Donald Trump is out there saying we have the hottest economy in the world. How is that possible? Voters aren't buying it. The public, if we had such a hot economy, people would be more confident in the strength of the economy. If we had such a hot economy, capital would be flowing into America. See, Trump keeps talking about all this money that's being invested in America. Well, if that were the case, the dollar would be going up, right? If you're going to make investments in America, you're making them in U.S. dollars. So if there was trillions being invested in America, the dollar would be going up because people all around the world would have to buy dollars to make those investments. The fact that the dollar is tanking shows you that Trump is lying. They aren't investing in America. They're divesting from America. They are selling America. They are getting out of America because we don't have the hottest economy in the world. We have the coldest economy in the world. The consumer knows it. Investors knows it. just that Trump doesn't know it. And all the Trump ass kissers in the Republican Party don't know it because they keep parroting the lie that we have this great economy. And they're just going to go down with the ship, and they're going to take the whole party and capitalism down with them because it's going to elevate the credibility of socialism. So all this stuff happened yesterday. And also, by the way, Canada's prime minister, I didn't mention this, but he gave a speech, right? And in his speech, he said that the global political order had been ruptured, right? And Ray Dalio talked about how there's going to be a new political order, right? What are they talking about? They're talking about the end of U.S. dollar dominance. That is the political order that's being turned upside down. And that's what's going to topple America's economy because we depend on this order. This is the order where we get to buy everything, right? We don't have to work hard. We don't have to produce, but we get to consume. We get to write checks that nobody ever cashes. We had a great deal going, right? And Trump blew it, right? Now, it was going to happen eventually anyway, right? Whether Trump escalated it or not. And I went over on prior podcasts how Trump had poked the bear and brought this out. But now it's out. And the order is being turned on upside down. And central banks are remonetizing gold. They don't want dollars. They don't want treasuries. They want gold, right? And this is a game changer for America because now we can't write those bum checks anymore. Now they have to clear. Americans have to produce again. We can't do it. We don't have the factories. We don't have the infrastructure. We don't have the supply chains. We don't have the trained workforce. We're up shit's creek, right, without a paddle, right? Because we don't make paddles anymore. They're all made in China. So this is a major collapse that we're going to go through in the dollar, in the bond market. Gold is just telling you that, right? This does not happen. I've been buying gold and silver for 25 years. And I've never seen this, right? So something broke. But if you don't know what to look for, if you don't realize that we're in a bubble, you don't see the pin, right? You don't know. We are going to run out of silver. Everybody is going to run out of silver. That is the problem. And what do you think is going to happen to the price of silver when there is no silver, right? So you got to buy it while it's here. Again, this is not a bubble. This is the pin. The bubble has been pricked. The bubble is in the U.S. bond market. The bubble is in the U.S. dollar. The powers that be, the Federal Reserve, they are clueless. They are more clueless now than they were in 2008 on the eve of the financial crisis. Right? They couldn't see that, and they can't see this. But anyway, as crazy as yesterday was, today is even more insane.
The Federal Reserve's inability to comprehend the current gold and silver rally highlights a profound institutional blindness. While political narratives boast of a robust economy, the underlying financial reality is crumbling. The dollar has hit 4-year lows and record lows against the Swiss franc, and consumer confidence has hit a 12-year low. This divergence proves that capital is fleeing rather than entering the United States, effectively dismantling the myth of American economic exceptionalism. This market shift signifies a rupture in the global order, marking the terminal phase of U.S. dollar dominance. As central banks pivot away from treasuries to remonetize gold, the privilege of writing uncashed checks is ending. The surge in precious metals is not a speculative bubble, but the pin pricking the inflated bond and currency markets. With a physical silver shortage looming, the ability to transact in paper for metal will soon vanish, leaving the unprepared trapped in a failing currency. Let's get back to the interview.
Gold is a monetary metal. It is the most important monetary metal in the world. He said that he is in charge of monetary policy. A monetary metal relevant to monetary policy? How could it not be? Yet, according to Powell, he doesn't care. It means nothing. Gold can go to 10,000, go to 20,000. Doesn't matter to Powell. How can it not matter? You know, I pointed this out on this podcast. But when Alan Greenspan was Fed chair, same job as Powell, he said gold was the most important indicator that he looks at. He said that we're not on a gold standard, but we're on the next best thing because he uses gold to guide his decisions. He said gold is how he knows if he's got the right monetary policy, if he's too loose or too tight. He said if gold is getting above 400, I know we're too easy and we need higher rates. He said if gold falls below 300, then I'm too tight. We need lower rates. Now it shows you, gold is 5,500 now, right? It's 10 times higher, more than 10 times higher. What does that tell you? Monetary policy has been too loose for too long. But the point I'm making here is that a prior Fed chairman said gold was his most important economic indicator as to the efficacy of Fed policy, a check on whether or not he was doing his job right? It was the free market, check on the central bankers. Did you get interest rates right or wrong? Because the central banks are just picking interest rates, right? It's not the market. So what feedback do you have? How do you know if you're the Fed and you set interest rates, how do you know that you got it right? Well, what Greenspan said is we know because I look at gold. Gold is the free market's way of telling me whether I got it right or wrong. Now, here you have Jerome Powell in the exact same job that Greenspan had, and he says he couldn't give a shit. He doesn't care. He doesn't look at gold at all. Now, one of these guys is wrong, right? Powell says gold is irrelevant. Greenspan said it was the most important, signal he had. Who's right? Right? Because they were both Fed chairmen. They're both supposed to be so great, right? They're supposed to be, the gods of the economy, right? They're all knowing and all powerful Fed chairmen, yet they have diametrically opposed positions on the exact same thing. Now, I side with Greenspan, right? Greenspan had it right. Gold is important. Powell just doesn't understand how important it is. Gold soaring is saying, Powell, you got it wrong. You better hike rates ASAP. Rates are much too low. In fact, the whole time gold's been going up from 2,000 to 3,000 to 4,000 to 5,000. Gold's been screaming, you're too easy. You're too loose. You got to tighten up. Yet what did the Fed do? They loosened into gold's warning that they were already too loose. By the way, you'll notice I did the Tucker Carlson interview less than a month ago. The price of gold was 4,000. It's 5,500 now. That's how fast it's moving up, right? This is a big, big deal. This is just not a little move. But Powell could not care less about it, right? It's like, you're a fireman and someone tells you, hey, there's this, the house is, there's a big fire. And, you're just, I don't care. No big deal. Let it burn. I mean, how much clearer could the warning be? The dollar is going to collapse. Gold is telling you. Now, Powell, did say in the same response where gold means nothing, right? He said some people might argue that gold going up represents some kind of loss of confidence. Yeah, some people, the smart people, right? There's a lot of people that know this, right? So he said some people might jump to the wrong conclusion that there's some loss of confidence, but he said that's not true. And he said the reason I know it's not true is because I'm looking at the bond market, and the bond market is well behaved. And if there really was a loss of confidence, bond prices would be falling. Yes, they will be falling, but the loss of confidence is being expressed first in gold and now silver, because those are the most sensitive. Just like with the financial crisis, subprime blew up before the rest of the mortgage market because it was the most sensitive. And that's why when the Fed said, don't worry about subprime, it's contained, it wasn't contained. I knew it wasn't contained. I knew it was going to spread to the rest of the mortgage market. So what Powell is basically saying is gold and silver are contained. Don't worry about it. It's not a loss of confidence. It's contained to gold and silver. No, it's not contained. Gold and silver are just moving first. That's your warning sign. You're going to see a crash in the bond market. But of course, by the time the bond market crashes, well, it's just too late to do anything about it, right? It's too late to preemptively do something to prevent the crash. Oh, it's already happened, right? You can't, stop the horses, close the barn doors when the horses are long gone. But that's what Powell wants to do. He wants to wait till every horse is gone to say, okay, we better shut those doors. What good is that going to do you? And meanwhile, there already is some evidence that the bond market is not right because yields are about 4.25 in the 10-year. They were 4 before the last rate cut. In fact, the Fed has cut rates now, I think, 6 times, and yields on treasuries are quite a bit higher, over 100 basis points higher than they were before the first cut. So the Fed was not able to lower long-term rates. That's already a sign that confidence is being lost. But you can't wait until it's completely lost and there's a bond market crash to think, oh, maybe I should do something because it's too late. And the same thing with the dollar. But that is exactly what is happening. Central banks are moving out of the dollar. right? They are replacing it with gold, right? Gold, just like the U.S. went off the gold standard, the world is going back on. The world is going off the dollar standard. Now, they should have done it a long time ago, but they're doing it now. So the most patriotic thing you could do right now is to save yourself. So then you can come back and help save others. And you can only do that by getting out of dollars, getting out of U.S. stocks and bonds, getting into gold, silver, foreign assets, commodities. I've got the exact portfolio that you need to save yourself and your country.
The current Federal Reserve leadership's dismissal of gold as a monetary indicator stands in stark contrast to historical practice, in which the metal served as the ultimate arbiter of policy efficacy. While past chairpersons famously used gold's price movements to gauge whether interest rates were too tight or too loose, the present regime ignores the metal's scream to record valuations. This negligence suggests that monetary policy has been dangerously loose for too long, with gold's vertical ascent serving as a desperate warning signal that the central bank refuses to acknowledge. The assurance that financial instability is contained to precious metals is widely viewed as a fatal error, reminiscent of the early dismissal of the subprime crisis. With bond yields already rising despite aggressive rate cuts, the loss of confidence is visibly spreading beyond the metals market. Analysis suggests that gold's surge is not a speculative bubble, but the final opportunity to exit the dollar before the bond market crashes and the window to preserve wealth slams shut. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.